What's up, strategic investors? We're here to bring you breaking news regarding cryptocurrency and macroeconomics in a simple way that's easy to understand. This is one of the most volatile periods of history in the last several hundred years. Economics and cryptocurrency has never in history been as important to understand as it is today. We're looking to build a community of some of the brightest minds in all of finance. Asset management is like a game of chess, and we're always looking to stay one move ahead of the competition. Subscribe to our channel to become a part of the most comprehensive upcoming communities in cryptocurrency and economics. So enough with that, let's get to the content you all came here to see. In this video, we're going to be talking about the negative correlation between the US dollar and Bitcoin. This left chart over here is going to be the DXY, and this right chart is going to be the BLX, which is the Brave New Coin Liquid Index for Bitcoin. Both charts are going to be represented with monthly candles. And you can see that we have a whole bunch of vertical lines, and there are three different colors. We have red, green, and blue. The red is going to represent the beginning of a bullish trend on the dollar. The green is going to represent a bearish trend on the dollar. And the blue is going to represent the peak of the move of each. And as we mentioned, this is going to be a negative correlation, so it would be the exact opposite for Bitcoin, other than the blue, which predicts the peak of the move. I wanted to make sure that we talked about the peak of the move to demonstrate that all of this seems to happen in real time. Therefore, as you get the beginning of a move on the dollar, it may represent a lagging indicator to a degree. Each of these lines, whether it be on the DXY chart or the BLX, is going to be the same date. So this red line over here would be the same date as this red line over here on the DXY chart, which is going to be July of 2014. And as you can see, we had a pretty strong move in the dollar. This was also the same time that Bitcoin picked up momentum to the downside in this bear market. You can see that the peak of the move in the dollar over here also represented the bottom on Bitcoin's bear cycle this time around. And if we move back over here, we can see that we have some consolidation for several years. But we had a peak up here on the DXY, and that took us down into a new trend that was pretty bearish. And that is going to be represented over here on Bitcoin. So the point that we put in our top on the dollar and actually started coming back down in a pretty bearish trend was the time that we started going parabolic back in 2017. And then you can see over here that the bottom of the dollar, the peak of the move, also represented the peak of Bitcoin's move over here. But it's all real time. So it's hard to judge that you're getting a bottoming pattern on the dollar over here in real time. So if you were to use this beginning point for the next move up in the dollar, as you can see, we broke out here, or you could even use this one where we actually broke this candle and started moving higher. Either way, it was right around here where you could be pretty confident that we were at least setting up for some kind of a decent bounce in the dollar. If we could look over here, you already lost quite a bit on Bitcoin. That's why I mentioned it earlier as somewhat of a lagging indicator. But in real time, it's very accurate. And then if we come over here, you can see that this was the peak of the move over here, which also represented our liquidity crisis that we experienced in just about every market back in March of 2020. And then as we started coming back down on the dollar is when we moved back into our parabolic stage for the Bitcoin bull market that we just experienced. And as you can see now, it looks as if we are putting in a nice bottom in the dollar and trying to move quite a bit higher. And we're doing so pretty fast relative to previous moves in the dollar, unless you go all the way back to 2014. I also want to point out that we are talking in very small timescales, because if you step back and consider this same thesis from a larger perspective, pretty much the whole time that Bitcoin's been in existence, you can see the dollar has been pretty much in an uptrend the whole time. These minor moves in the dollar on a smaller scale do influence Bitcoin. So it brings the question, how would Bitcoin act when we get a macro cycle that takes the dollar into more of a more macro downtrend? While I think we do have a tailwind for the dollar in the near term, I think the majority of the next maybe 5 to 10 years are going to be spent as a economic situation that is more of a headwind for the dollar rather than a tailwind. Theoretically, this very well could be the first time that we ever see Bitcoin experiencing an environment with a bearish dollar for more than just a year or two, which I find to be very interesting to think about. I try not to limit Bitcoin down to like a hedge against inflation or anything like that. I more so see it as a hedge against a failing fiat system. And I think that really speaks to why Bitcoin likes to really move a lot higher when we start getting these moves down in the dollar. I think everyone understands the situation that we're in to a degree. It doesn't matter if you talk to dollar bulls, dollar bears, inflationists, deflationists, value investors, growth investors, people who invest in cryptocurrency, equities, fixed income, real estate. It really doesn't matter who you talk to. I think everyone's on a similar page about the end game for the situation that we've got ourselves into as of the last 50 years. But even the people who think that the dollar is going to go higher, a lot of them admit that ultimately they think that the end game is the dollar moving lower. And just about every civilization throughout history that has crumbled because of an economic situation has done so because of an inflationary force due to deflationary. There has always been deflationary forces involved, but it's a very hard decision for a politician to ostracize their people. And therefore, they like to just print the difference and try to lay low with how they're going about solving the issue. And I think there's a statistic that throughout all of recorded history that there's been over 40 powers that have been in decline throughout all of history, global powers, and there's only been one of them that has crumbled and ceased to exist due to deflationary forces. All of the rest have been due to inflationary forces. And as I mentioned, I don't remember the exact number, but it was over 40. That is quite the sample size. And if this really doesn't make a lot of sense to people who are just interested in cryptocurrency and don't know a lot about traditional economics and finance, an easy way to think about it is, what is this chart over here valuing Bitcoin against, right? You're not valuing Bitcoin against tulips or Ferraris. You're pricing this Bitcoin against US dollars. Therefore, it makes sense that if there's a different strength in the underlying denominator that you're pricing Bitcoin in, that should affect the price of Bitcoin also. And that's why we see this negative correlation. That's just an easy way to think about it if it's not making full sense after what we just talked about. And that same concept can be applied to all markets. So if you see people talking about how Bitcoin and the stock market are correlated, they really are two very different assets, and there's a lot that's different about them. It's not as easy as just saying that they're correlated all the time. What I think a lot of people are missing is that maybe Bitcoin's not necessarily directly correlated with stocks. Maybe it's that Bitcoin's correlated with the dollar or whatever it's being priced in, and the stocks are also correlated with the dollar because they're also priced in the dollar. That's why you see all of these different markets being somewhat correlated a lot of the time. And I want to point out that it's not a direct correlation between all of these markets because they do have a lot that's quite a bit different, and they can perform differently in different circumstances. But they all have that correlation with the dollar. So it's not a direct correlation among asset classes. It's more so an indirect correlation because they all are correlated against the US dollar or whatever currency or asset you want to price other assets against. So I just wanted to do a quick explanation. We've been talking a lot about fixed income and currencies on this channel, and I'm not quite too sure where everyone's at with their understanding of finance and economics and all that. So I thought this would be a good video to post just in case anyone was interested and didn't quite understand exactly what I was talking about or why I was talking about it. And keep in mind, this really isn't a chart of the US dollar. It's a chart of the US dollar against developed market currencies. And just as we were talking before, the denomination of what you're pricing it against matters. So in this circumstance, the DXY, about half of it is made up of the euro. It also has probably about 5 other currencies in there, give or take. But you can also find charts that pair the US dollar against emerging market currencies or other currencies or assets, whatever it may be. But that's a good way of seeing the strength of the US dollar from different perspectives. And considering the US dollar is the global reserve currency, the US dollar really is the one that needs the most paying attention to, regardless of where you're at in the world. When it comes down to it, the euro dollar market is actually bigger than the domestic market that we have here for US dollars. So that means that there's more US dollars in circulation outside of the United States than there is in the United States. And you ask how that might happen? That's a pretty good topic for a different video, but just for the sake of understanding this concept, we have a terrible trade deficit, which means that we import a lot more than we export, which means that we really have to print the difference. So in turn, we export our US dollars that we print, and we import products from all around the world. This is why a lot of people refer to the United States as having an exorbitant privilege. And the US has a deal with Saudi Arabia to where we pretty much provide them with a cartel for their oil. So as they need to transport oil throughout the world to customers, we provide our military backing to them so that no one can harm them. But in exchange for our military protection to guard the oil transportation across the world, they agree to only sell oil in US dollars. That means that everyone in the world that wants to buy oil has to have some kind of foreign exchange and reserve of US dollars. Although it does seem we're pretty close to a new regime regarding that, that is still the case for the time being, so figured that would be a piece of information that would probably help you guys understand this topic a little bit better. So pretty much an easy way to sum it up would be that we have a monopoly on money and we use it to our advantage in every way we can. So I think that does a pretty good job of explaining the basics of the negative correlation between these two. So if you guys have any questions or comments, just let me know below. And with that, I think we'll wrap up this video. Alright everyone, thanks for watching. We hope you all found this content valuable. If you did, like this video to let us know so we can continue to put out similar content. If you have any questions or comments, or if you have any suggestions regarding other topics you're focused on and would like to see us cover, just let us know in the comments below. And subscribe to our channel to become a part of the most comprehensive upcoming communities on all of YouTube. This economic environment only comes around once in a lifetime, and we're here to act like it. We're not here to talk you up. We're going to leave our emotions at the door and navigate these markets through the good and the bad. Keep in mind that this is not financial advice. This is more of a mastermind that we can all come together as a community and use each other's unique perspectives to better achieve logical conclusions. We really appreciate all of our team out there watching, and we look forward to continuing conquering these markets with y'all going forward. Until next time, stay one move ahead. Have a great day, everyone.